Hey y'all, welcome to BGTU YouTube. So today is May 10th and we had CPI today. I did a short little post on Instagram, but I want to come in here and actually give more detail because I've got more time. So first thing we're going to look at is we had some consolidation here. So I am on the 15-minute chart as you can see up here. And this was Thursday, May 4th. So Thursday, May 4th, we pretty much consolidated right here in this area. You can see that was a little area of consolidation. None of this stuff was here at that point in time. So we were just kind of bouncing back and forth. Now, if you've watched any of my other videos, you know I've said that this is an area that you can trade, but you need to be on a lower time frame, like a 3 minute, 5 minute, and that will basically be like a form of scalping. You're just taking small price movements. So what happened on Friday, May 5th is we had a huge gap up. So this gap goes from 408.64, 405. So we're talking like a $3 gap up. That's a decent sized gap up for the SPY. And then it gapped up, it went up some more. We had a bull flag and it ran into this resistance that began resistance on May 3rd. Yeah, this is all May 3rd. We couldn't get above that. So once we got back to this area, the bulls basically got stopped out by the bears again. So basically, I have bears sitting up here just kind of waiting for the bulls to peek their head through so they can kind of smack them down, is what's happening. So the bears were sitting here waiting for the bulls. They pushed up and the bears pushed them down. And then this was Monday, May 8th. And as you can see, we had some consolidation. Once again, just like here, we had some consolidation. Um, we had some consolidation right here near this resistance. So once again, if you like to scalp, you can go to a lower time frame and you can scalp that little bitty price action. Now for me, that's too small of a price action. And a lot of times when things are um, in this really tight range, you don't really get a lot of movement. You don't get a lot of volatility. So it may or may not be worth it with such a tight range. And especially if you don't have the volume. Remember, volume is your fuel for your rocket. These candlesticks are your rocket. It won't launch. So you may be in a winning trade as far as on the right side, but you still may lose because there isn't enough movement and volatility in the candles to increase or decrease the price, depending on what side you're on. So we have this consolidation. It was consolidating up. We got back up here, and the bears stepped in again and they pushed the bulls down. Now, this was Tuesday. So, Tuesday we had consolidation. And once again, it was a very tight range. This was slow. Once again, on these days for me, I don't like to trade because I don't have the patience to sit there for that little tiny movement. It's not enough money for me. I am always trying to make sure when I trade, the reward is worth the risk, and the reward was not worth the risk on this day, which was Tuesday. So now we get to Wednesday, which is May 10th, and we have CPI, Consumer Price Index, reported at 8:30 a.m., which is about an hour before the market opens Eastern Time. And so we had this huge gap up above our area of resistance, but it was not able to hold. Once again, there were some bears sitting up here that was like, not today, bulls. We're just not going to have this. And it really pretty much pushed them right back down. Now, don't forget, these are 15-minute candles. Now, I did take this trade. I was on the 5 minute taking this trade. So I was right here. I took a couple trades today, and I don't have them all on this chart, but I can tell you about a couple of them. So the first one I took was actually this fall right here. I was trading some SPX contracts, and I took a fall right here. Now I know you're gonna look and say, but you only made, it was like 400 and something bucks today. Because my goal right now is consistency, I'm not worried about the money. So I am worried about being consistent and trading my plan. So what happened today was, according to my plan, I entered a trade, I exited the trade. I was happy, I knew it. I pressed sell and I left the market. So when you see those profits, I am not trying to impress you and say I can make 10,000 a day, I can make 2,000 a day. I'm trying to show you, even with a small amount of money to invest, you can still make profits and be consistent. Now you've seen that Monday, Tuesday, I didn't make a whole lot of money. Monday I made like, I think it was $40 on Monday. No, $95 on Monday, and I made $40 on Tuesday. As you can see, this is what I was dealing with. So I took like one or two trades, and it's like it's not even worth the aggravation of really trying to do anything. So I took my money and I left. I wasn't trying to do a whole lot. But today gave me the opportunity to actually make some decent money in the market, and I took it. So this was trade one that I got of, excuse me, that I got out of. I had a couple contracts and I exited at various exits. So if you can, it's best to buy more and then take profit at different areas. Or if you can't afford it, you can buy your one, and you just got to pick your profit target and ride to that profit target. When you hear me say, when you happy and you know it, press sell, like that is what I do. I literally is like, this is my take profit. I hit sell and I wait for my next one. I hit sell and I leave. I don't care if the market goes from here to 10 buck 2 up this way. I'll go to here to 10 buck 2 down this way. I take my money, I sell, and I leave the market alone. If you sit here all day for 6 hours and look at candlesticks, um, some days you will find opportunities, some days you will not. Oftentimes you may end up over trading out of boredom. You've made your money for the day, but because you're bored and there's nothing exciting going on, you begin to force trades, and then you end up losing all of the money you just made earlier in the day. So for me, when I tend to make money, I don't want to sit here and watch these candlesticks all day. So I basically leave and go do something else, or I do another project, whatever it is. But I'm not trying to sit here and watch these candlesticks, because the likelihood of me getting in a trade that's probably not going to work out in my favor is great. So when you make your money, go be happy and go do something else with the rest of your day. So I took another trade, which was like here, and I got that second trade there. And then I took a couple little trades up in here. It was taking a while for that to happen. So it was like one trade, two trade. This is three, and then maybe four, because I had four trades today um, that I took. So once all of this happened, I was not in the market. This was a beautiful trade for anybody that caught it. Congratulations. But we basically came back to this consolidation area where we bounced once, twice, three times, four times, five times. So this is a really nice trend line. Don't forget, we are on the 5 minute, and we came right back to where that trend line was, and we actually bounced off of it, and just the bulls were large and in charge doing their thing. So, but we did run back into some resistance, because there were some bears sitting up here, as they always seem to be right now, basically saying, stop, the buck stops here, guys. We ain't having this no more. So now what we're looking for, I'm gonna go back up to the 15 minute. We are right here on this line, and we are now looking to see kind of what's going to happen tomorrow, because tomorrow we have PPI. This is your manufacturers, and then we also have unemployment claims. Excuse me. So we could either move up higher, or we could move down lower and possibly come back here and then bounce up. We can bounce up in here until we push up out to the upside. So this could potentially look like this, and then we go to the upside, or it could potentially look like this. So you always want to account for both scenarios. So we can look like this, where we go to the downside. Um, And it may even go up before it comes back down. So you may even get something that looks like this, where you come down and do this and go that way and then end or come back up. So once again, and I'm pointing that out because you don't control the outcome of the market. The only thing you can do is control yourself and trade with whatever is happening. So you have to be really careful about having a confirmation bias to say the market is definitely going up today or the market is definitely going down today. Because when you have that confirmation bias of which way you think the market is going and it actually is running against you or it's moving against you, either you'll get in against the trend and get stopped out or get smacked around a bit because you're trying to trade against the trend because you are trying to confirm your bias, or you say I was wrong, this is the way the market is running, so this is the way I'm going because I want to profit versus lose money. So you always want to account for both directions and then trade in the way that the market's going. I'm always going to advise you to try to stay out of this little choppiness right here. We had some right here as well. Try to stay out of this as much as you can. For the most part, if you've traded it, you probably know this is just not very profitable. And this is literally like watching paint dry. I don't want to watch paint dry. So I don't want to be caught up in that type of chop. So you want to look for trades like we had today, trades that are moving that allow you to get those runs. It's days like today that will make up for those small losses that you may have taken, say, yesterday or the day before because you got caught in chop. So if you had that and you kept your losses small, which I did have, I think it was one or two losses, I don't remember for sure, but they were really small. And this first trade took care of the loss. So you can have a 50 percent win rate and still be a really profitable trader as long as you manage your losses. So imagine like this: I am willing to risk $50 to make 150. So that's a 1 to 3. So if I make 150 one day, 150 a second day, I've made 300. But let's say I take two trades and I lose $50 on both those trades on the next day. I lost 100, but I'm still up $200 for the week. So as long as you keep a decent risk reward and you manage those losses, you can have a low risk or a low percentage but still be very profitable. So it's all in managing your risk and managing how much you're willing to lose and sticking to it. Um, so I hope this was helpful and I hope that, you understood this trade and what's kind of happening. So tomorrow, like again, is PPI, which is the manufacturing price index, and we're going to see, are we going to move higher and or lower in the market, and we may have another day similar to this day, and then we'll probably may consolidate around a little bit because the next week we have FMOC. I know the PPI, CPI, UTI, and whatever other I, they just keep rolling around weekly. And then we have the FMOC, which is coming around kind of every other week once they report. So we had a meeting last week with JP, and we're going to have one next week. And so that's going to be another thing that could move the market. The last thing that could move the market is this whole debt ceiling thing. They've got to figure this out before June 1st, because if by June 1st, if they don't figure this out, they can start defaulting on their payments. And the issue with that is like the veterans that rely on that check, maybe they're totally disabled, like they won't get those as people on Social Security, maybe your grandparents or godparents or something like that, they may not get those checks. Government workers may not get those checks. So it's like a really big deal if they default on that. Now, I don't have any opinion on should they print $1 trillion coin or not, or do something different. I just know they kind of need to do something because that will be pretty catastrophic globally if we default um, on our payments that we should be making on our debt. So That's what's coming up in these markets. You guys stay safe in these stock market streets and be sure to always have a plan and trade your plan. Talk to you soon.